Good morning and welcome to this weekly market update from MRC Markets. Today is the 22nd of February 2013. What we'll do today is go through some technical analysis on Euro Dollar, Cable, Dollar Yen, Dollar Swiss and Gold. Basically just sort of wrapping up the week here, give some sort of review of what's been going on in the week and what sort of chart setups are in play at the minute. For any new followers, we have 3 moving averages on each of these charts. The first one, the red one, is a 55 simple, the blue one is a 100 simple, and the gold is a 200 simple moving average. We're not making any trade calls or recommendations in this video. You trade at your own risk. If you please read our full disclaimer on our website www.mrcmarkets.com. Okay, let's have a look at the weekly chart first of all on Euro. Basically, last week's candle was very interesting because we closed below the 100-week moving average. Last week's candle was looking very bearish indeed, especially the previous week. There's a big bearish engulfing, so the bears are definitely back in town there. And we got a close below the 100-week moving average, so the sellers really were profiting via this market. As you can see, last week's candle was we had a big upper wick there. So the bulls wanted to test that 200-week moving average. We got that test, and then we closed below the 100-week moving average. And you can see this week's candle really has just followed on for it, and we really have just started to tank this week. Let's flip it to the daily, because that's what I think the most interesting chart is on this currency pair. So as you can see, we've had this trendline support which we've been looking at for a long time now, and it was looking really bully indeed. I mean, this uptrend has been holding since since mid July 2012, and you can now see this week we have broken. Well, officially in the daily chart, a daily candle close is more classified as an official break. Some people will look at the weekly chart and say it needs a weekly close, but it's near the end of the trading week, so it looks like it will close below this trendline support. You can see here that the blue, we've got a 100-day moving average which is testing currently, and that is providing some sort of support. The daily candle, today's daily candle, will be very interesting to see if it closes very bearish like this, and then the 200-day moving average will be the next target for a lot of people. So the other setup that has been in focus is this recent bounce off the trendline support up here. We've had the 50% retracement. If you zoom in, you can see it a bit clearer. Yesterday it closed above, so a lot of people thought. And it also had a bit of lower wick as well. So I wouldn't have been surprised today if we've had some sort of bullish candle, but it hasn't done that. It really has just continued to sell off. The break of the trendline support was the key really, and also in terms of the fundamentals, we had some LTRO data out today which was very bearish for the euro currency. So anyway, the key focus now on this daily chart is all about the 100-day moving average, and do keep a focus on the weekly just in case we do close above this trendline support and the 50% retracement. Also on the weekly, you've got the 55-week moving average down there as well, but that's a long way away. That's below the 130 handle at around 1.2923. But yeah, in terms of the daily, that's how I've really got it set up. And also on the 4-hour, nothing much of interest there really. We did have this trendline support up, which was quite in focus, but that's got broken. It's all about the bigger picture really. The bigger picture is this big trendline support from July. And yeah, it's just good to keep some perspective really on the chart. So that is the overall perspective for me personally. Okay, let's have a look at the cable. On the weekly chart, what we've been speaking about for a long time was the trendline support, and that has now finally been broken. And that was last week's candle. Last week's candle followed a fairly bullish candle there because it pierced below the trendline support, but then last week's candle was just a massive bearish engulfing, very bearish candle indeed, and this week's candle has followed on. So that's why weekly candles are very important to look at and to keep some perspective on really. I mean, in terms of week, I don't focus on the weekly too much. It's quite a long time frame, but you can see that the weekly candles really are strong and really do show a lot in the markets. But yeah, the other thing I'll be focused on this weekly chart is this big fib setup from the lows in 2009 to the highs in 2009. You can see if you zoom in fact we'll zoom back out, you can see if you can see my cursor here, I'm hovering over a key bounce there after 50%. There's one there, another one there, another one there. We also post this on the Twitter feed. Hopefully you follow at MRC_markets. There's 50% retracement at one spot 52.71. We've had a lot of clear bounces off this. You can see this current weekly candle is trying to close above. I mean, you can see this lower wick here really is forming, and the buyers really are trying to push this up and close it above the 50%. But currently on this weekly candle, the bears are in control and they have it below the 50%. So the weekly close will be really interesting to see here. Also, if you flip it to the daily and leave that same fib up, you can see that we had, I'll zoom back in, you can see that yesterday was a nice reversal candle, but you can see that the peak of that candle was literally this 50%. So you can see as soon as we get these closes above, previous support then tends to act as resistance. You can also see on today's daily candle, we've come above this 50%, but the sellers have come back in and pushing it below the 50% level. So yeah, in terms of the daily, that's really how I've got it. That's the focus for me. I mean, if we do start to get a nice bounce up, then the main fib will be from these highs up here to the lows, but we're still a long way away from that now. If you flip it to a shorter term time frame, you've got the trendline resistance there, but of course we're still a long way away from that. And then of course you've got the 55 bar moving average on this 4 hour, also still a long way away from that. So it really has been one big aggressive sell off here. The other trendline resistance, actually, if you bring it in on the 1 hour, you've got this one here. So keep an eye out if we start to pop there. But on this 1 hour, if you zoom in, you see that the 55 bar moving average is currently acting as support. But yeah, personally I definitely think the daily and the weekly charts much more interesting. I mean, look, you can just see there clearly on that weekly, there's clear spikes of that one spot 52.71 level. Did act as nice support, and if we do get a close above today, then I wouldn't be surprised to see it rotate towards the upside, towards that 200-week moving average. Okay, so good dollar yen. Dollar yen on the weekly and the daily, it's just really bully. I mean, especially on that weekly chart, you can see those multiple green bully candles there. Since we closed above that 200-week moving average, it really is just flying towards the upside. There's no sort of huge resistance level really. Even if you flip it to the monthly, if you want to look at a really long-term chart, the fib I'd look at will be from those highs there, and then you draw that to the lows. Then that 50% is at 99.84, but of course we're still a long way away from that. So I mean, yeah, I mean on the daily chart, you got obviously got a really steep uptrend support. I mean, if you flip it to the 4 hour, you've also got this trendline support here. That'll be a good one to look at actually. That's probably what I'd be focused. It's been so bullish. I mean, you can only really look for buying opportunity. I mean, it's been due such a big retracement. Of course, we could get this retracement come any time. And if it does come, then I wouldn't be surprised really to tank very quickly towards the downside. We've seen so many strong uptrends before really go up very quickly and then just fly down. So yeah, in terms of the 4 hour, that's how I keep it set up. If you're looking for any buying opportunities, also if you saw me just draw that fib there, you can see how well that 50% retracement's holding at 92.39. So we do come down and break this mini trendline support, and then keep an eye out on that, because we could form a triple bottom there. But remember, double bottoms normally tend to hold well, but triple bottoms do tend to struggle, in my opinion. Let's have a look at dollar yen, dollar Swiss, sorry. Not a massively interesting chart. I mean, I think last week's video we spoke about the trendline support, trendline resistance, sorry, and we've now broken that and we're starting to fly up. So the key resistance I'll be looking out for to see if any sort of interesting reaction at is the 0.94 to 09 level. But yeah, that's the well on the 4 hour. What do we have? Trendline support, mini trendline support there. But that's really how I'd keep it set up. Really, it looks like it wants to come back down. It's starting to look at these 4 hour wicks. They're forming a lot of upper wick there. So I mean, the two sort of forms of support, you'd be this new trendline. Well, the old trendline resistance now could act as support, and if we break that, then this clear 4 hour uptrend there, and you also have the moving averages just around here on the 4 hour chart. Okay, that's the Forex charts done. Let's have a look at gold, everyone's favourite commodity. The fib we've been speaking about for the sort of last few months really has been this big fib on the daily chart from the lows at 1526 to the highs of 1795. We had a nice clear spike at the 61.8% retracement at 1629, but we struggled to rotate towards the upside. We got capped here at the 55-day moving average and the 200-day moving average, and we really have just sold off over this last sort of week, 2 weeks really. So the next key level that all the bears will be looking out for is this 1526 spot 91 as the key support. Yeah, if you flip it to any shorter time frame, nothing massively interesting really. Everyone's just selling any sort of a rotation towards the upside, just capping those buyers, and the bears are just coming in and selling it. So yeah, the only real interesting level for me is this 1526 to see what happens here, if we get a nice reversal or not. Okay then, that's all for today. Hope you enjoyed that video. Feel free to comment under our YouTube video if there's any other pairs that you want to look out for next week. Then comment under there, and I'll have a look at them next week. Also, feel free to look at our Twitter feed. It's at MRC_markets. I'll post a few of these charts up, and also be posting stuff throughout the week. Okay, thanks for listening. Have a great weekend, and I'll catch you next week. Cheers.